Welcome, everybody. This is Jeff Scott. It is 11:30 Eastern Time. I'm sitting in LAX, so it's 8:30 here on October 20th. I'm heading back to the East Coast after speaking at the George Lee seminar in Anaheim, and I will be back out here on the West Coast this coming weekend for the HGSI meeting, but more about that in a few minutes. I'm going to try and get through a quick, or my typical hour-long presentation. I'm in not the world's best internet world, so we'll see if I can actually get this done. If not, then I'll just bail for the week and do it again hopefully next weekend. I'm entitled today QE and Beyond, with a melt up with a question mark. Sort of a perfect storm for stocks last week. Once the government got out of its own way, Janet Yellin announced as the next Fed head, who's definitely a dove in the Bernanke mold. Kicking the can down by the Congress means that the Fed's probably on hold from the perspective of tapering. So the combination of the agreement to kick it down the road, the Janet Yellin appointment, and comments from the Fed about probably not tapering led to an aggressive move up in the market, as we'll see as we go through and review the data. The question is whether we get a pullback, which we're certainly long overdue, prior to moving into a year-end rally, which would be my guess. But we'll wait and see, and unfortunately all it takes is some bad news somewhere to throw that all out of kilter. As always, it's for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. Keep in mind that most physicians lose money with their investments, and I am not affiliated with any software vendor or trading company, and the tools I demonstrate are those that I use in my daily trading, and I have paid for everything that I use. I have a lot of programs, but in reality, I only need several to be happy. I need a real-time charting program, whether it's TradeStation or Thinkorswim, or in most cases both. HGSI is my best analysis product. EdgeRater, which is a complement and expands the usefulness of HGSI. Big fan of seasonal analysis using EdgeRater, Magenta Trader, and then a big fan of Ian Woodward and Ron Brown and their Woodward and Brown investing. Like most of the people on this call, I'm not a guru, and I've tried to become my own guru for me personally, and I recommend that each of you try to become your own guru and to learn from those people that can help you become one. So to me, those people have been Ian and Ron Brown, Alexander Elder, William O'Neill, Gil Morales, Chris Katcher, Van Tharp, Stephen Bigelow. David Elliott was another one that I was a big fan of, but unfortunately we recently lost him. He passed on. I have tried to read, go to live seminars, and watch how people trade, and then take the features of their trading that make sense to me, and then I incorporate them in my trading style, and I think it's worked for me. It's something that I think all of you should consider, but the key is to be your own guru and not rely on a third party. I would like to do a special shout out to Ian and Gil Morales. Thank you, both of them, who on my invitation came down to the Anaheim meeting and gave great hour-and-a-half each presentations that were extremely well received, and those of us in attendance really appreciated them taking their time to come down and join us. Where are we at in the market? This is the typical pattern that markets go through, except this one's been a weird market because it runs up, it looks like it's in trouble, it pulls back 3 to 5%, and before we get into any danger zone, it's off and running again. And we've seen since the middle of November a 27-28% run-up in the S&P 500 with several 3 or 4% corrections, I believe 1.7%, 1.5% correction along the way. But you sell off for a couple of days, and then you're off and running again. And I think that this is, as Chris Katcher and Gil Morales have termed it, a outcome benefit issue that's perhaps purely related to this whole thing about QE infinity. All I know, if you're long, it's been a good run. Remember, if you think the market is in an uptrend, you want to be long. I like to go long on pullbacks. It's easy to know where to set my stop right beneath the pullback. If the market is down, you don't want to be going long. You want to be shorting retracements. And as I talked about in the meeting in Anaheim, I've never been really good at shorting stocks, but when I've sensed that the market was turning over, I load up on contra ETFs, and I spend a lot of time buying puts on leading stocks, or not leading stocks, but stocks that have turned over, falling stocks, and that's been a good way to play for me a falling market without having to worry about the potential risk on shorting a stock versus losing premium on a put. Final plug about the HGSI workshop, not the final plug, but a final plug. It will be this coming weekend in Palos Verdes. Those that were in Anaheim had a taste of who Ian was and what HGSI is all about. I know many of them have told me that they're going to be joining us this weekend. There's still some spots available, and if you haven't made up your mind, you probably need to make your mind up, because if you're not there, you're missing a gem in what Ian and Ron will present. Plus, you'll have Gil Morales, George Lee, myself, and others who will be contributing from the podium as well. For those who I've met in Anaheim that are new here, this is where you can find all my old ones on YouTube, with the key name being the capital JASCANCER doc. So if you search for JAS Cancer Doc, my initials are JAS, I'm a cancer doc, then you will get to my section, and there's probably, by this point, close to 100 of these on the web. They're also stored on HGSI, and I'll show you that. So we just had a great meeting in Anaheim, George Lee's meeting. On my way home right now. I'll be at the HGSI October workshop in Palos Verdes this coming weekend, and in Las Vegas in the Magenta Trader Advanced Workshop, which is occurring immediately before the Las Vegas Traders Expo. For those who haven't been here, here's the website, and very quickly just to show a couple things that are, I think, important. See if that actually worked. www.highgrowthstock.com is the URL. And if you are new to this webinar, new to the program, a free 30-day trial by clicking here, and they don't ask for your credit card, just a little bit about who you are and what you're familiar with. If you go under support, investing strategies, you'll see my section where it's another place that you can download the videos that I've done. If you're new to HGSI, let's see if I can find the ones. There's a 3-part series. This is the 3rd part. I did them in August over one weekend, and basically it was the basics in part 1. Part 2 was, let's see, it should have been there. Part 2 was a little bit more advanced, and then part 3 was basically a live in the market session. So they're available on the web, either on YouTube or at the HGSI site. So if you're a newbie, it's a good place, I think, to start. As always, I like to look at the futures, and right when I last checked, they were flat. You can see it's green in Asia. Everybody's living on the euphoria of the U.S. deal in the U.S. market on Friday. And you could see on the futures at this point in time, I'll use the word flat. They're all within a micro percent of the flat line. Now, I like to start my calls, my presentations, by getting a sense of what the market did this week and getting an idea of where it might go next week. So I start within HGSI is a tool called Group Performance Analysis, and you could take as many groups as you want, identify which groups you want to compare, and then run an analysis that tells you over the requested time frame in an equal dollar value of shares perspective what that group did and compare it to others. So I do this to get a sense of whether growth stocks are working, whether my buy watch is good, better, or worse than my current holdings. If it's a lot better than my current holdings, then I need to start moving out of what I have, look at some other areas such as in my buy watch, and then compare it to the S&P 500. So this is a Friday to Friday based upon those groups that I was looking at over the weekend. bought at the close Friday and sold at the close this Friday, so a true one-week performance. The first thing that you should notice is all you see are black until you get to the bottom two groups, which means everything except for two groups were positive for the week. That's extremely bullish and a big turnaround from the prior week. In green, you have the S&P 500 that was up 2.42%, actually a laggard. If you look at the IBD 50 and the HGS 100, you'll find that HGS 100 was up 4.71, 2 times the S&P 500. The IBD 50 for the week was up over 5%. I was a happy camper because my holdings were up 4.95%, and you could see 85% of the stocks that I had at the end of the week were up for the week. That's a pretty good week for anybody. The buy watch was 82% positive, up 4.36. So HGSI type stocks, growth stocks, currently working well. Best of Woodward and Brown were up 5.17. My GIF All-Stars, which I'll show you again at the end, were up 6%. So growth stocks perform. Now you might say, Jeffrey, that's not fair. I can't buy them at what they closed on Friday. What if I bought them at the open Monday? Well, since Monday opened down and then the rest of the week seemed to be up from there, you can see that if you just look at that performance, it's significantly better. The S&P 500 up 2.63. Best of Woodward and Brown under $10, up about 3%, so outperforming the S&P 500. My buy watch up 5.3, HGS 100 up 5.49. Both my holdings and the IBD 50 up about 6%, and Best of Woodward and Brown up 6.35. The GIF All-Stars above 6.91. The reason why the growth stocks perform better Monday to Friday than Friday to Monday is everything opened down on Monday, and then they had a chance to grow from a smaller starting point. I look at Ian's bucketology to get an idea of how oversold the market is. I would expect the green and red, which represent in red those stocks in the S&P 1500 trading below the midline in the Bollinger Band. In green, those trading above the midline. 85% above the midline is extremely bullish. This is a little bit concerning when you look at the buckets. 35% of the stocks in the S&P 500 are trading above the upper Bollinger Band. Since they live in that area less than 5% of the time, one would expect that when you start to get a lot of stocks in a place that they don't usually hang out, they revert back to their mean, and this could predict some softness in the market as we start the week, or at least some sideways movement. Talked at the meeting a lot about the Hindenburg. Haven't seen a legitimate signal, I believe, since August. I was wondering whether we'd get a double top in September or October with more Hindis. Still looking for them, but at this point, all clear from a Hindi perspective. We'll come back to the George Lee template later, but that's kind of the exciting new thing in EdgeRater, which I want to mention before we finish today. So once I've looked at my Excel sheets to get an idea of where we've come from, let's take a look at what the charts are telling us. And I'd like to go and look at some of the, very briefly, at some elder indicators on the major indices within TradeStation. So what I'm specifically looking for are the color of the price bars, where green is bullish, I can buy or hold, red is bearish, I can hold or sell, and blue is in between, I can do whichever. And I'm also looking for any evidence of divergences. And divergences have been a problem going back quite some time on the S&P, where you get higher highs and not higher highs on the MACD, on the histogram. And we're at it again. So from a impulse indicator perspective, the S&P 500 closed near the high, outside its envelope, very green. It's at a place where it may run up that envelope for a while, but it's pretty extended. Weekly and monthly also green, very bullish. But this is exuberance, yet here's peak 1, peak 2, and we've not taken out the prior peak. So if we continue to not have the MACD get above the most recent MACD despite a higher price high, that would be consistent of further MACD divergences and predicting that at some point probably sooner or later we're going to see a correction. If I look at the Dow Industrials, we'll see that much less out of control than the S&P 500. Everything is green except for the monthly, which is blue. That had a pretty profound pullback. You can see all the red sticks there, or the red price data there. They're within the upper envelope. They still have some room to run. Not making much of a MACD histogram here, so the buying power, the buying pressure is indicated by that divergence, suggests that this rally may not be long to go. Now, if you want to see where the strength is, you can take a look at the NASDAQ and small stocks, and you could see how far above that envelope the NASDAQ closed, green across the board, and it too is making a much higher high, but not demonstrating a higher high or even getting back to where it came from on the MACD histogram. That's very worrisome, so I've got lots of divergences, although each of the indexes are breaking out to new recent highs, and all of them are extended. So enough of that. Now I want to go into HGSI and start my top-down analysis. So the first thing I want to do is go into my designer user groups right here, and then go down to Woodward and Brown user groups and go into Major Markets Plus. Actually, I want to do this on a warehouse, I'm sorry. And then I want to put it on top-down analysis, and I'll see about 20, mostly indexes over. Give me this view of what the intermediate and short-term technicals have been on these indices. So it's given me a couple weeks look back, unlike the two-day force, which has given me just a two-day understanding. And what I see is small caps with the S&P 600, the NASDAQ, transports, interestingly, NYSE Composite, which is a big mixture, leading the way. And of the major stocks, the S&P 500 clearly being a laggard, closer to the bottom. The dollar, a laggard, volatility got crushed again. Commodities are down. Silver and gold have been kind of interesting, but as we'll look at, have still been weak. If I look at the S&P 500, I've added Bollinger Bands just to play with right now, but basically, as we've been looking at for weeks, and I should have pointed this out at the meeting, but the S&P 500 had a 7.5%, 8% correction from September to the middle of November. It's up about 29% from that. What I should have pointed out at the meeting was you had a bingo for 2 days right before we set our new low, and that new low was marked by two Eurekas in the kahuna. This is the S&P 500, and as we talked about the meeting, the Eurekas and Phoenixes are on the NYSE. And as we've gone up, we've had these modest pullbacks. They've all been painful. And then as you're wondering what to do, even the ones that knifed below the 50-day moving average, we quickly recovered and moved up. We're in another one here, and my guess is we probably have a little bit more room to go. What's interesting is we've taken out the highest bars on this chart. So when you've got nothing to the left of your price bar, you have a price bar that doesn't have any overhead supply. There's no obvious resistance, except it will get extended. It's not at the top of the high jump later. I look at this, I see a very, 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 very bullish pattern. And although we might expect a pullback at some time to the 50, we're going into November and December soon, which are some of the strongest months of the year. So, extended, at risk of a correction, but I really think that we're going to have a very bullish close to this year. If I look at the NASDAQ, a lot more pocket pivots on it, so it's a little bit uglier to look at. You can see how it did not, really hasn't, except for back here and here, undercut the 50, and certainly never has undercut the 50 to any great degree, and it bounced off the 50 about 10 days ago. and it's in a nice move. And despite all the crap in Washington, only one negative day in the last 7. So the NASDAQ even stronger than what we're seeing in the S&P 500. If I look at the Russell 2000 as a picture of small stocks, again, lower left, upper right, new highs, at least new recent highs, very positive, bullish-looking market that at some point is going to get extended and be at risk of a correction. If one looks at the Dow, those 30 stocks that we worry about so often, this one got hit a little bit harder, and it pulled back all the way to the 200-day moving average, but it's bounced as well, and it's not near highs yet. It still has a way to go, and we'll see if it can take out the previous highs, which would be extremely bullish. Now, the transports have made new highs, and I believe that with the Dow lagging, we've not confirmed the Dow theory new buy opportunity or bullish signal, but maybe we'll get that this week. If I look at some of the other things that are important to me, I can look at volatility, and I call this the whack-a-moles, where my kids would put money in, these little mole heads would be there, and then we take a hammer and whack them down. Well, the VIX is the mole. Whack, 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 and it continues to get whacked down every time it sticks its head at much above the 200-day moving average. It's currently falling. It may have more room to go. As George Lee pointed out several times, when the VIX is rising, it's bad for stocks. When it's high and falling, it's good for stocks. You eventually get to a point where it bounces, which is bad for stocks, and we'll see if we don't have continued fall in the VIX this week. It closed with a kind of a spinning top doji looking candle, and what I've learned from Bigelow, the way it opens is the direction it's going to go from that candle. If I look at the dollar is interesting, and I think that once on Wednesday they announced that Janet Yellin was coming in Tuesday or Wednesday, the dollar sold off, reaching new lows. I am a dollar bear. My belief is eventually this quantitative easing and the debt will catch up to us, and we perhaps will see some further weakening of the dollar, which will make hard assets go up. It's probably not horrible for the stock market, but it's horrible if you have living on a fixed income on money in the bank, because that money becomes worth a lot less from a buying power perspective. Gold, when dollar falls, gold is supposed to go up. And I don't know if gold is trying to put in a bottom here. It actually had about a 5% move up here this week, or 6% move up. But still probably too early for me to be in. A safe buy for me is when it breaks above this 200-day moving average and retests it. You could see it broke above the 50 and it couldn't hold and it came back under, but at least get above the 50 before I get interested. And if we look at silver, I think you're going to see the same exact pattern. Deep bearish market underneath the 200-day moving average. It looks like it's trying to put in a bottom here, but it's really going to have to get above this 50 and this 200 for me to get excited. Yes, there were kahunas on the gold and silver this week, but I'm still not a big believer yet. But since I am a dollar bear, at some point in the future, one would expect the gold and silver to go up, but right now I don't see it. So once I've looked at the indexes, I like to look at the health of the market, look at some internals. Those in Anaheim, I didn't do this today, but I'm going to pull up the S&P 1500. Now I use it from the broad market indices because this is something that's calculated off the S&P 1500 group of stocks, which means it's got volume included. So you look at the S&P 1500 and you can see the strength of this market. Pocket pivot on Friday, just a lower left, upper right, pretty tight. I wish our stocks all look like that, but that shows you the strength. Now what I can do with what we call the I shares, I just realized that I spelled revised wrong. It's been like that forever. I'm surprised no one's pointed it out to me. I can start to look at things like, here's Bongo and Forest for all green. You can see the Eureka that was earlier in the week, which is a bullish signal, our follow-through day on the NYSE. You can see the pullbacks that have occurred. But what you can also see is that you've got a DI plus minus crossover that occurred when this run started. So the DI crossover is positive, all right? New highs, new lows. You can see that the highs are above the lows cumulative. This is the cumulative win of the highs, so it's pointing up, so more new highs. It's trading above its 13-day moving average, which is bullish. You could see from the colors that we are dark green, which means that we are new high, new lows are greater than 65. Again, a bullish sign of the market. How about accumulation distribution? We can see that we had a crossover in the A's moving much above the E's. And we can see that the B's have turned over a little bit, but they're high. The A's are rising, so the B's must be becoming A's. C's are falling, and the D's and E's are going down. Those are very bullish from a accumulation and distribution perspective. If I combine the ABs versus the DEs, you can see that the A's and B's are definitely moving up. So from a internals perspective, I think there's a lot of strength in the market. I think George pointed out that at times of peaks of the MACD, the McClellan oscillator, that usually is when the market starts to get tired. And we basically have a lot of peaking going on in the McClellan summation index and oscillator. I apologize for the background noise, but I can't help that. I'm in an airport. And perhaps McClellan starting to give us some hints of a market that is overbought. No surprise with those Bollinger Bands. The next thing I want to do, I'm still bullish, although nervous a little bit for the next couple of days, but I can get over that, is look at industry groups and get an idea of where the money's going. So I left top down so you can see there's 146 groups. If I look at force index positive, I see that I have 86 out of the 146 are positive. If you look at negative, you'll see that just a couple, 4 of them, including my favorite biotechs, are negative are negative from a force perspective. So what I did in the meeting in Anaheim, I do every week, is I'm going to go very quickly through the top 10 groups and make comments about what I think about some of the stocks. So number 1 is communication index. I like 2 or 3 of these. Parker Vision is a small stock, doesn't make any money. Something happened this week. It had a huge run-up, and looks beautiful, I guess. Bible gap up, a bunch of kahunas. Probably should pay attention to it. I'd have to do research. It's been in a downtrend for a while, got deep below the 200-day moving average. I don't like the fundy picture, but I do love everything is green. Bible gap up, multiple big days, big kahunas, bullish-looking chart, not the kind of stock that I would get because I don't know anything about them, and I'd have to go do some research. I don't like the fundamentals. I do like the next 2. Finisar is one of my favorite stocks of the weekend. It's in a clear uptrend here. And I looked at it back here as crossing the 405 when it broke out above the 200. And then you had a Bible gap up here, which would have been a great buy opportunity. But I think you've got another one here. You've got a pocket pivot occurring after a bit of a rounded base with the kahuna. Good volume came in, all is green. Remember, we are in earnings time. Their earnings are due December 4th. You need to make sure you check your earnings before you make your purchases. This, to me, looks like it's blasting off. Great earnings per share growth, a Fox 7 stock with negative earnings growth, and now blasting positive. The other one I like in this group is AFOP. It had a little deeper pullback this week, but it pulled right back to support, and very reminiscent of NQ last week, which I had a strong interest in that stock, which I owned, and it had 5 days in a row of moving up. So I look at AFOP, the characteristics that I like to see, stock in an uptrend. Let's see if I can do this. The Bongo weekly red bothers me because that tells me that it had been in a downtrend. The daily has turned green. The forces have turned green. So there was some distribution in the stock as it went through a profound sell-off. But it stopped and now has built a little bit of a base on that 50-day moving average, and then had a gap up on Friday with a DA crossover and a kahuna. I think it's ready to run again. It's got great earnings per share growth, and it's in the #1 group communication equipment. I'm going to do a right click and go back. Now I'm going to look at oil, gas, and exploration. Let me say that these stocks look, the patterns are great, but they're probably too late. I'm a little nervous about a lot of new money going into these. I certainly am holding the ones I have. For example, one of my favorite of the group is Continental Resources, and this is a picture indicative of what most of these look like, is that sometime in early September they bottomed out on the 50-day moving average. Bottom is the wrong word. They paused, free parking, and then this guy's up 20% in the last 6 or 7 weeks. And that's a huge move. It's at the high jump bar, but it's bullish. It's all green. It's got a pocket pivot, add-on buy point perhaps, and maybe I'm the fool and we should be buying these. I'm a little bit concerned because all of my favorite ones that I've been talking about over the last couple of weeks, here's Oasis, they all look the same. They all took off at the beginning of September, and they haven't stopped. And you know, this is probably not a sustainable run-up despite the great earnings, and I'm a little worried that they're at the top of the high jump bar and getting a little bit extended. I looked at a lot of these. Here's Carrizo, same picture. What a beautiful chart. And these are all stocks that we've been talking about on this call several times over the last couple of weeks. The top one listed was, just look at the top 3, Pioneer. Again, the stock is now melting up. Look at how the trajectory has changed. If you're a pure momentum player and you can watch it all day in the market, you grab these things, you hold on, and you ride them as hard as you can. If you're an end-of-day trader, it's a risky proposition. I'd rather buy them when they pull back closer to a major moving average. And then one that I find interesting is Chesapeake, not as extended. It had a Bible gap up after a basing pattern here. Probably the most viable of the energy stocks I've shown you. But the issue on these, on this one here, is it's about M&A talk, and that may or may not be sustained, and they may open up big, announcing a big merger. Noble Energy is another one of my favorites, and again, if you want to buy it when it pulls back, they're all pretty extended. So I love the group. I wouldn't necessarily be selling if I owned them. I'd be tightening my stops. I just don't know if I'm ready to put fresh money in. Internet software and services. Google, what a great day Google had on Friday. Blowout earnings, a 10% move, viable gap up. You know, if you read your Morales and Catcher, it tells you stock rules here. And this is a stock you might consider buying if it trades up. It seems absurd. It's an expensive stock after a big move. But viable gap ups often continue to run, which is one of the themes of their second book from Morales and Catcher. Kahuna's huge volume. Viable gap up day, everything is green. What's not to like about Google? Yes, I know it's extended, and that's somewhat bothersome. Baidu, less extended, had a pullback, it probably in sympathy, gapped up on Friday, DI crossover. Kahuna doesn't have the same kind of earnings per share growth of Google, and that might be concerning, but certainly a leader. Baidu, the Chinese, Google. LinkedIn looks to me like it wants to be bought again. It had paused to refresh, undercut the 50, and on Friday broke up above the 50 on a Kahuna with a DI crossover. I find that one looking good. I don't get Pandora because I think iTunes now competes with them, but you know, they're in a nice run. They don't make much money or any money, and I would skip that one. Yahoo is all about Alibaba and the value of that franchise. Although their CEO gets a lot of credit because their stock has had a nice move, I'm not sure how much of it is intrinsic to Yahoo versus extrinsic on the value of their Alibaba shares in a potential upcoming IPO. This group is extremely strong, which is why I keep looking. Here is Cena, great earnings per share coming into the stock, another turnaround play. Basing here, a little uprising base. Broke out on Friday, probably in sympathy with Google. SoFun, another Chinese internet play. A little bit ugly in here, pulled back to the 50, and then had a massive move up on in the rest of the week. Some earnings per share growth, but not as strong as some of the others. And then the other one that looked kind of interesting are one is Sohu. Again, a little bit of a pullback and then a bullish move on Friday in sympathy with Google. All I could say is this is probably the best looking group. I apologize for the noise again. Internet retail, take a look here. Facebook, leads in the internet retail. You know, this is nothing new. We've talked about this every call that we've done for weeks. And you can see the pullback to the 200. I'm sorry. Here's Facebook. And you can see broke out here with a viable gap up, continued to run up. Looks in a very powerful move. Earnings coming into the stock, still very bullish. We've talked about it several times. Amazon, again, not as extended as some of the other stocks here. A move off of the 17-day Friday, a viable gap up with the kahuna. Everything is green. Their new Kindle Fire HD, XDs, or whatever they're calling HDs, are coming out this week. Perhaps that'll give some opportunity for some growth for Amazon. There's a lot of good stocks here. Yelp, clearly a leader, breaking out after a small pullback with the kahuna. Not much in the way of earnings, but a great momentum play. Netflix has earnings on Monday. George said this isn't their best quarter on a historical basis from beating earnings, so it might not be one you want to chase, but certainly got great earnings per share growth, lower left, upper right, an exciting looking stock. Priceline.com, lower left, upper right. I feel like a broken record this week. There are so many good stocks out there that if you're not in this market, you've missed a great opportunity. The same token, we are getting late long in the tooth. Number 6, our oil and gas equipment. They've been hot for a while. We've been talking about Halliburton and Schlumberger. What moved up to the top this week was Baker Hughes. Now, a little pearl of the program, if you put your mouse there or do a right click, you can go to more info from the web, and I'll just take a look at FinViz. Watch how they'll put BHI as the topic. Now let's see if there's any news. Growth, 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 growth. Beats earnings estimates. So great earnings for BHI, so maybe this is the beginning of a new run here. A viable gap up after a couple of pocket pivots. What did Ian know? They had 4 kahunas in the last 10 days on this stock. And this is a stock that wasn't very extended, although it had a big bump, and it's at the high jump now. I didn't like it as much when I looked at it before because it closed near the bottom of the day. But you can't argue with the pattern that with the kahunas, the pocket pivots, the viable gap up, you put a stop about the bottom of that day, and if it trades up at the open on Monday, I don't think you're wrong to buy it. I'm a big fan of the next two, Schlumberger and Halliburton. They both have had a big run, are getting extended up near the top, the high jump bar. But kahunas, pocket pivots on Schlumberger on Friday, and Halliburton, basically the same story. What a great move for the stock that was hammered with the Horizon BP platform blowout and that tragedy. So a lot to like there. Maybe you just want to buy oil service holders. Semiconductors, top group or top type of stock over the last several months have been solar companies. And there's a lot of solars here. So very quickly take a look at some of these. Now, word of caution. Everything I'm showing you is extended. Extended stocks have more risk in them. If this market continues to go cha-cha-cha, they will continue to run. But I am concerned about a lot of these things being, as I said, appear to be overbought. For solar, you know, used to be the big gorilla here, used to be a $200 stock, had a profound sell-off, found support here on the 200-day moving average, recently probed above the 50, had a kahuna, everything is green. So here's one that's not overly extended. It makes money, although I don't like the earnings per share direction that it's going in. If you don't own a solar stock, this is one that might be worth taking a look at. Don't know much about Taiwan Semiconductor, had a deep pullback under the 200-day moving average, failed, broke above it, and now that 200 is going to become support. Often they come back and retest, but they're breaking out with a Pocket pivot, everything is green. Might be interesting. I'm a fan of several solars. One of my favorites is Canadian Solar. Take a look at the earnings per share growth. A big turnaround stock with earnings coming in and high growth rate. Is it extended? Absolutely. Does it have more room to go? I bet it does. Himax is a partner with Google on Google Glass. It broke out of its flag 10 days ago, but really hasn't gone anywhere. I think it's setting up a squeeze in here, and perhaps it will break out soon. Kahuna here, bullish-looking candlestick. Might be interesting to watch this further. Not overly extended. Jinko Solar, this is probably the cha-cha-cha of the solar stocks. Big run up off the 200-day moving average. Certainly getting extended, but this is the big daddy as far as the juniors, as far as performance. It makes money, great earnings per share growth, and I like that a lot. Anything else in here that I wanted to point out? It doesn't look that exciting here, but Freescale Semiconductor had a mobile breakout on Friday from a squeeze. You can see the Bollinger Bands have squeezed down. So a volatility breakout, taking out recent highs with the Kahuna. It's a breakout stock. Take a look at the earnings per share growth. That might be one to take a look at as well. So I'm favoring, from a safety perspective, some of these stocks that are not as extended, but there's a lot of good-looking stocks out there that are extended. Right-click, go back, next group down, and take a look at our industrial conglomerates. This is just GE. These have great volume. You can see GE has 35 million shares. The force looks at price and volume, but it had a great day. Had earnings come out. Didn't look so hot when I read them, but the market loved them. 2 pocket pivots in a row, 2 Kahunas, huge volume, everything's green, viable gap up. I'll have to ask Gil next week whether viable gap ups in GE are as meaningful as viable gap ups in smaller, faster moving issues. Essence of time, I'm going to go back and not look at any more of that one. Regional banks, we've talked about them for this last several weeks, and it looks like the same groups are up at the top. I own KeyBank, and it had a 6% move for the week. And you can see these have gone through a pretty deep, I'm sorry, I'm just messing up with this mouse. So many of these, well, they'll probably all have the same basic pattern, a pretty profound. Oh, I know what I'm doing wrong. Okay. I'm just being a little bit mouse happy here. All right. They all had a pullback. This one didn't get down to the 200. A number of Kahunas on the way getting above the 50. Not extended at all. Big volume on Friday, makes money, but no earnings per share growth. Fifth Third Bank, a Midwest regional bank, although they also have some down here in the deep south of Florida. Pulled back deep to the 200, running again with pocket pivots and Kahunas. SunTrust banks, again, the same story, a pretty deep pullback under the 50-day moving average. A couple of pocket pivots came in, a couple of Kahunas. Looks like it's running again. And I mentioned that I've got KeyCorp. I had bought some really cheap way out of the money options that are in the money now, and they're due in December, so I'll see what happens with this. Something's going on with the regional banks we've talked about over the last several weeks. We'll see how far they have to go. Next are the top groups, or top sectors or industries with system software. And very quickly, really like Qihu a lot. This was one of the favorites that we had at the meeting in Anaheim. Darn it, I got to move my mouse before it gets to the end. All right, and you could see very powerful up move at the high jump bar. So what happens at the high jump bar? It went sideways, pulled back to the 50. Gapped up here with a Bible gap up. That was the day to buy. Well, you know what? It still looks like a good thing to buy to me. I had a Kahuna on Friday, just now getting up to the prior highs. Everything is green. Great earnings per share growth. Qihu is one of my favorite stocks going into the week. Then looking at the 10th group, which is why I used to like to go to 10. Neptune was one of my favorites over last weekend. I talked about the pullback here to the 50, and I said it was a buy. Well, what happened? 1, 2, 3, 4, 5 days. 4 of the 5 days it was up. It had a move from 20 to 25, which is a pretty nice move, 25% move in a single week. And why did I like it? I liked it because of its uptrend, pulled back to a major moving average, great earnings per share growth, and it certainly did not disappoint me this week. Anything else up here that a lot of people at our meeting seem to like info blocks, and you can see these lines were a flag that I drove here, and I said when it breaks above the flag I get interesting, and I did, and I bought some when it had a pocket pivot, a kahuna, and broke out from the flag back here on, I guess that's Monday, and traded up a couple bucks for the week. So that's the top 10 groups and some of the stocks that I found attractive. I want to look at the underneath. I just want to make a couple points on the negative groups. Let me just take a look at biotech. Biotech has been extremely strong. Last week, several things happened that caused some pain and suffering in the biotech space. Just to give you an idea of what happened, and they're not all listed here of the ones that I saw this in, but you've had about 10 days of a correction here. This is Acadia, ran up to close to 30 and pulled back to about 20. No specific news. They've got a drug for depression and Parkinson's disease patients, which people are saying from a sales perspective might be the next Lipitor, which is one of the largest selling drugs of all time. The drug is not approved yet, so you have to give it some time. I guess it's healing down here. I didn't find it that exciting or compelling to get in. Celodex, this one has started to move up a bit, I believe, but I guess not. So the Celodex has also pulled down to the 200-day moving average. You can see that 8-day exponential is now a blanket, and I wouldn't touch this till it broke above it, but you can see the same pattern. It got killed. NPSP, it got killed the same way. This is one that started to move up a little bit off the 50. What do these things have in common? Not much in revenue, not much in earnings, and they got down. They got said negative things by Kramer that he wouldn't buy them right now because they've run up too far. So a lot of these stocks got hurt. Anybody that was in this guy, I apologize, but you know, I lost interest in this guy when it did nothing over months. They have a black box warning in their CML drug. I came out when the drug was approved and said, you know, I'm not certain that it's a big problem. It looked like there was about 1% risk. And then a clinical trial came out. It's a much higher number, and the trials were stopped. The stock went in the toilet last week with a major correction down to about $3. I'm still not buying it because you worry about whether the FDA is going to do something else. But what a horrible day for holders in area from 18 to waking up to a $6 stock, and now it's about a $3 stock. I guess this is why biotech worries certain people. Here's one to watch, Mankind. It's got a lot of probably more interest among the individual investors than it does the institutions. But this is a company that has a inhaled insulin, which means you wouldn't have to take shots if you have diabetes, and it might work better. It's been turned down by the FDA twice. Not because the drug didn't work, but for issues around manufacturing and having one dose be the same as the next dose, and some concerns that the FDA had. Its PDUFA date, which is the date that it's due to either get approved or denied, is within a couple of weeks. It's pulled down to the 200-day moving average. It's priced like a call is. It's $5. It might be something interesting. I know that I was told when I brought up the idea of the strangle, buying puts and buying calls, maybe $1 above the price, because if the drug gets approved, it goes to $9, and if it doesn't, it goes to $1 or $2. So you don't have to buy anything that's in the money. Buy them out of the money, and so they'll be cheap, and you might end up filling on one side. Just a thought. Enough of Mankind. So that's my top-down review. I throw those stocks into a list, and I'll look at my list before I say goodbye. Now, what I also like to do is a bottoms-up approach, and to see if I could find some additional stocks that are interesting without going through the indexes. So what I like to do, one thing is to open up the warehouse view and go into all securities, which is up on the top, and then open up the Sprinter one-step, which is in HGSI Strategies, Woodward and Brown. This is the newest of them. Archive, Reference Library. Go down to Miscellaneous. Look for Sprinter one-step with Bongo, and I just took the 8,000 stocks down to 117. There's a couple themes here that I haven't shown you yet that are worth me going through, so let me point them out. Anything that touches Macau is doing well. Earnings came out for Las Vegas Sand. NPEL is basically all Macau. Lower left, upper right, breaking out here, all green, great earnings per share growth. It's probably one to keep an eye on. It's at the top of the high jump bar, so that makes me a little bit nervous. Las Vegas Sand broke out on great earnings, increased their dividend, great earnings per share growth coming around. So these are stocks that have stubbed their toes, and now they've got earnings per share growth. We call them a box 7 stock, and this one looks extremely compelling as well. Truth be told, I already own NPEL and Las Vegas Sands, and they're both at their high jump bars, so they're not without risk. You know, I made a comment the last couple of weeks that Gilead looks to me to be the next Celgene as far as long-term potential, and I know several people bought on that recommendation, although this is for educational purposes only, and it had a great week, setting all-time highs, pocket pivot, potentially good add-on point. Everything is green. They've got a lot of earnings coming into the stock over the next couple of years. My favorite has been Celgene, and you could see why, from a move of 77 in November now to 161. So there's one of my doubles for the year. Doubles from 8 to 16 are great. From 3 to 6 are great. But doubles from 70 to 160, now that's a double. And you could see it's trading up near the top of the channel I wrote. So I might be a little bit nervous about the short term. But I think over long term, this is a stock that will be the darling of the biotech world and has a bit of a way to run. We've been talking a lot about Oasis Petroleum. I already showed it to you. It looks to me like we call a climax run, and I don't know how to hold a fire pole that has grease on it. I don't know where to buy those. I'm nervous to buy them. A lot of interesting stocks here. Many of them we looked at. I don't know anything about Universal Electron. Just when I looked at, I looked at a different one that sounded like this. Forget this one. So you can run sprinters very quickly. As you could see, some of the best stocks that we looked at, the oil and gas stocks, run right up to the top, plus a few others who perhaps their group rank wasn't high enough or their EPS rank wasn't high enough to show up on some of the other reviews. The other thing I like to do that I demonstrate is the group inclusion filter. Why do I like the group inclusion filter? Because I like 6% returns, don't you? And so all I do to do the group inclusion filters, I open up my designer, I go into tools, group inclusion filter, and I'm going to do it so the guys and girls from Anaheim, ladies, I'm sorry, will get another chance to see what I did because I did it so quickly. And what I do is I go into the various folders that I've made. I go into the green ones, which are updated daily, and I want to get HGSI strategies and rouse and catchers. So I pick Bible gap ups. I pick pocket pivots. I go to Woodward and Brown. I pick best of under 10. These are my favorites. You all have your own favorites. Best criteria, ERG 240, growth, HGS 100, leaders. QEPs, stocks and groups to the upside, strong there. Then I go down to my user groups and I pick some of the ones that I like. I'm going to pick Big O. You know who the Big O is, O'Neill, a couple of filters that I've got to help identify his kind of stocks. Delta ERG, rising ERG stocks. HGS 100, EM Point Score, IBD 50. Market Smith 250. How about mobile breakouts from the squeeze? These might be good stocks. And the hypothesis here, I'll pick the Vector Best Top 100, what the heck, equal opportunity guy, and my sprinters, and my top Robert Bongos. So the hypothesis here is each of these groups represents somebody's scan, my scan, something I've downloaded, something I read about, that represents the best stocks in the market right now. So if I had a stock that was on a lot of these scans, then that might be one of the better stocks. So the group inclusion filter is going to tell me which stocks are in the majority of the group. So let's make a group from it. Let's call it, I'm going to call it Post Anaheim, A-N-A-H. I'll just stop there. I'm going to look at the top 15 stocks. I'm going to hit OK. No, I'm sorry, I want to hit yes. Do I want an index? I'll say no. So basically, these are the stocks that showed up over and over and over and over again in these lists. So let's just take a quick look at the top 15 and then a couple more comments, and then I'm going to say good night. So here it is, Post Anaheim. There's my top 15. Let's just look at them in alphabetical order and see if there's any things here that we can add to our potential buy list. Here's AFOP. I've already told you it's one of my favorite stocks. Great earnings per share growth, pulled back to the 50. A nice move up above resistance on Friday with a kahuna and a DI crossover. Viable. Extended Carrizo Oil and Gas. I think this one was on our list last week. Continental. I don't know how to handle these. Pocket pivots can be additional buy-on points. These are not without risk, but my gut is that these continue to move, but riskier buys than something that's pulled back in basing. Energy Partners, not quite at the high jump bar. Good earnings per share growth. This is one that I own. Beautiful lower left to upper right, continuing to move. LinkedIn, we looked at it before, pullback, looks like it's getting ready to run again. Lionsgate Entertainment, another beautiful chart based upon my personal criteria that I like to see. Why? Broke out up here with a straight line, lower left, upper right. It's gotten into sort of a double bottom here, or is that a cup and a handle and a breakout on increased volume on Friday? I'm not that good to call that, but pocket pivot, DI crossover, kahuna, there is more volume coming in. Lionsgate, we talked about this weekend. You can put your stops right about here, but this one looks like it wants to run as well. NIC is a small electronics company. Used to be called eGovernor. You know, the pattern is nice. Pull back to major support, Bible gap up and went up, pull back to support. It had a Bible gap up on a kahuna on Friday that might be indicative that it's ready to run again. It's a smaller stock. I don't like the earnings per share growth, but it's interesting. Oasis, another one of these. Climax Run, perhaps oil and gas producers. Power Secure, this is one that I also liked on my personal list. I remember what they did. Electrical equipment, natural gas metering systems, so it don't look that exciting as a business. Sorry if you work for them. Everything is green. Why do I like it? Because it's had a nice rounded bottom. It looks like it wants to break out. It's crossed, Ian likes to talk about breaking above the 405, and I think it has. And so it's now on the right side of the cup, breaking out here. It's got earnings per share growth. That's interesting. Does it have enough volume for me? It's got 275,000 shares. It just has enough volume. So that might be interesting. So do you notice I did that group inclusion filter? All I'm finding are good stocks. Here's another one I talked about that I liked this weekend. Santoris was a great mover here. It's been weak for some time. Put in a rounded bottom. Two kahunas, a pocket pivot, breaking above the 50. Everything's green. Great earnings per share growth. Unlike those oil and gas plays, this is a low-risk buy to me. I'd buy it if it trades above Friday. I put my stop probably down about where that line is and trail that stop up above the 50 pretty quickly. If I'm wrong and the stock is going to break back under the 50, I get stopped out. If I'm right, I have an opportunity to see if it can take out the most recent highs. Santoris, SNTS. SoFun is another Chinese internet play. I have position in this one. Pulled back to the 50 and took off again. This is a hard one to buy from my perspective. Earnings per share growth perhaps slowing down. but it's in that internet story, internet services group. It's a Chinese stock, and there's a lot of momentum into this play, but it's not one for the faint of heart. Synaptics are on every notebook. Obviously, they're doing well. Look at this earnings per share growth. It's unbelievable. This was a stock to have bought back here when I started first seeing it. I didn't buy it. I wish I did. Red candle high on Friday. It's extended, although not quite to the hot jump bar. This is a beautiful looking stock. I got to see what it's going to do here. I'd like to see it pull back to that 17 or 50. I love the earnings per share growth. It's got revenue growth, but it's a little extended. It had a red candle high that makes me nervous. We talked about Winnebago at the meeting, a little bit looser chart than some of the better charts, meaning it's not a straight, tight lower left, upper right, but is lower left, upper right. This and Thor have been in vogue. Something said it's because of mobile meth labs. I doubt that. That was somebody said that at the meeting. It was a good laugh, though, when they said it. But it had a viable gap up on Thursday in an uptrend. It makes money. You know, it's viable on that basis, and you follow viable gap up rules. I think that's our 50. And then last one is the Russian internet provider. You know, I've been saying this looked expensive for the last 3 months. It keeps getting more expensive. It has some earnings per share, although not much growth. Everything's green. A lower left, upper right breaking out to a new high. That looks somewhat compelling as well. And then Yelp, at least this one's given us a double bottom and a base up here. So it's paused to refresh. Had a kahuna. Looks interesting as well. So what I've basically done tonight is I looked at the market, said that the market is extremely bullish, although it does, you know, it's at a point where one might expect somewhat of a pause to refresh. We looked and we showed that high growth stocks were certainly moving over the last couple of days and leading the market. You saw the performance not just of my positions but of the various watch lists that I associate with high growth stocks. We did a top-down perspective, saw a lot of stocks that looked interesting, but many of them were extended, especially the oil and gas. I did my sprinters and my GIF to give you some other ideas for bottoms up. My buy wish list this week, I just put it up here for a couple of minutes. Again, I'm concerned that we could have a short-term pullback. Long-term, I'm still very bullish. These were some of the stocks that I liked, and if you look at them, many of them are the stocks that we pointed out, and some of my favorites were Santoris because of the pullback, Lionsgate, Alliance Fiber. I talked about the Vegas stocks. I talked about a bunch of the Chinese internet plays. Talked about a lot of these. One whose pattern I liked, I just put up NSM because it's indicative of a type of stock that I like to buy. And why do I like NSM? I wish it didn't undercut the 50. All these pocket pivots down bother me, but it's in an uptrend. It's pulled back to the 50. I think it had a mobile breakout from the squeeze on Friday. I can't remember, but I do like the fact that it's got great earnings per share growth, and it looks to me like it wants to break out again. Just something to watch. I'd like to see it get above the 17 and see where it's going to go. So basically on that note, I want to thank everybody again for coming to the George Lee meeting. Thank George and Greg Mills for inviting me to speak. Thank Ian and Gil for coming down and sharing your knowledge with us. And, you know, it was just a great time. I mentioned Edge Rater, so I want to just, for those that know George Lee and know how he likes to trade, Edge Rater automatically now will figure out for you on your watch list things along the lines of who has got a squeeze on, who's breaking out, whether it's a pair box, sell in reverse, stop in reverse, rather mobile breakouts, pocket pivots, counter channel squeezes, and it's a great tool to very quickly find the stocks that George Lee talks about. It interfaces excellently with HGSI, and it's something I highly recommend. Now, people ask, Jeffrey, how do you watch so many stocks during the week? What I do, and I'll put my screen on and then say goodnight, is I drop everything into a major watch list, and then I'm scanning throughout the day looking for the types of things that matter to me, whether they are Bible gap-ups, candle high, candle low, mobile breakouts from the squeeze, breakdowns, pocket pivots. So I put my watch list together, and I basically wait and see green come in, which tells me I'm triggering a signal, and then I can make my buy and sell decisions during the day from my radar screen. On this note, I'm going to thank everybody again. Have a great week. Be careful in the market, and we'll talk to you again in the next 1 to 2 weeks. And I hope to see a lot of you at the HGSI meeting. Good night, and thank you.